Welcome to Next Gen Investors. In today's video, we're going deep into the fundamentals of one of India's leading NBFCs, Shriram Finance Ltd. This company has shown strong performance post-merger and is attracting a lot of investor interest. But the question is it really undervalued? Or are we just riding the momentum? Stay tuned till the end to find out if Shriram Finance deserves a spot in your long-term portfolio. And don't forget to subscribe to our channel for more videos on fundamental analysis, stock strategies, and investing wisdom. Company background and merger. Shriram Finance Ltd. is the flagship NBFC of the Shriram Group. In 2022, a major transformation happened when three entities, Shriram Capital, Shriram Transport Finance, and Shriram City Union Finance, merged into one single company. This merger created India's largest retail-focused NBFC with a very wide customer base. Shriram Finance now serves over 67 lakh customers and has more than 6,000 branches across India. Their focus is mostly in semi-urban and rural India areas that are still underserved by traditional banks. The company mainly lends in for segments commercial, vehicle finance, MSME loans, personal loans, and gold loans. Its strength lies in the deep relationship it has built over decades with self-employed and small business customers, especially in South India. Financial highlights. Let's look at how the company has performed financially. For the full year FY25, Shriram Finance reported a total income of over 45,000 crore rupees. Its net profit after tax came in around 6,400 crores. That's a significant jump from the previous year. Return on equity stood strong at 15.7%, and return on assets is around 3%. Both are good indicators for an NBFC. Net interest margin, which shows how profitable their lending is, was steady at around 8.4%. Asset under management has grown steadily and is now over 2.15 lakh crores. And the best part, their cost-to-income ratio is low, around 30%, which means the company is managing its operations efficiently. The management has guided for 15% annual AUM growth, and they've been delivering on that promise quarter after quarter. Valuation analysis. Now, let's understand how the market is valuing Shriram Finance. Its current market price is between 660 to 690 rupees per share. The price-to-earnings ratio is about 13 times, which is low when compared to top players like Bajaj Finance, which trades above 30 times earnings. The price-to-book value is around 2.2 times. That's slightly higher than industry average. But it's justified because the company is delivering superior returns on equity. However, if we look at the discounted cash flow-based fair value estimate, it comes to around 397 rupees per share. That means the current price is almost 60% higher than its theoretical intrinsic value. This doesn't mean the stock is overvalued, rather, it shows that the market is already factoring in strong future growth, strengths, and competitive advantages. So what makes Shriram Finance a valuable company? First, they have a massive reach in underbanked areas of India. While most private banks focus on urban salaried customers, Shriram targets truck owners, small businesses, and rural entrepreneurs. Second, their strong branch presence and field agent network help build deep trust with customers. This results in better collections and lower default risk, even in unsecured lending. Third, their parent company, the Shriram Group, has a strong legacy. Their cross-selling ability of insurance, deposits, and mutual funds through Shriram Life and Shriram General Insurance adds extra revenue. Fourth, the post-merger synergy is helping in cost saving, technology adoption, and expanding their product base. Risks and challenges. But every company comes with risks, and Shriram Finance is no exception. Being a non-banking finance company, it carries higher leverage than regular banks. Its debt-to-equity ratio is around 4 times, which makes it vulnerable in times of tight liquidity or rising interest rates. Second, a large part of its portfolio is linked to commercial vehicles and rural lending, which are more sensitive to economic slowdowns. Third, if the Reserve Bank of India tightens NBFC norms further, or if cost of borrowing rises, it could affect their margins. And lastly, digital NBFCs and fintechs are slowly entering the MSME and rural lending space, increasing competition. Future growth strategy. Despite these risks, the company has strong growth plans. They're investing in technology and automation to reduce cost of customer acquisition. Their mobile apps and partner networks help disperse loans faster, especially for small businesses and gold loans. They're also expanding into new financial services, like digital lending and cross-border remittance. Shriram is planning to expand into Tier 3 and 4 towns even deeper, where banking penetration is low and growth potential is high. And remember, as India's economy grows and infrastructure spending increases, demand for commercial vehicle loans is also likely to go up, so the long-term growth runway for Shriram Finance looks promising. Conclusion and final thoughts. So, should you invest? Shriram Finance has a solid track record, a strong rural presence, consistent profitability, and a reasonable valuation. Its fundamentals are far better than many other mid-level NBFCs in the market. But don't forget, it's not a risk-free stock. As with any lending business, asset quality and macroeconomic factors will continue to influence performance. If you're a long-term investor looking for steady compounders with a strong dividend payout, Shriram Finance could be a smart choice. For short-term traders, this might not be exciting unless you catch it near support levels or during correction. Disclaimer: this video is for educational purposes only. We are not SEBI registered advisors, and this is not a stock recommendation. Please do your own research or consult a qualified financial advisor before investing. That's it for today's video on Shriram Finance Ltd. If you found this breakdown helpful, please give a thumbs up, share this video with fellow investors, and subscribe to Next Gen Investors. Comment below and tell us, do you think Shriram Finance can beat Bajaj Finance in the next decade? Until next time, keep learning, keep investing.